Okay, so today we are going to be looking at QuickBooks for retail and manufacturing company. So, like you see on screen, this is QuickBooks website where you get to learn everything you need to know about QuickBooks products itself. But in this tutorial, I'm going to show you how to use QuickBooks software to manage your retail and manufacturing operations. This is going to be like a run through on how QuickBooks works for a retail and manufacturing company. So, what exactly is retail and manufacturing company? Basically, it's this industry that focuses on buying and selling products. Now, for some, they will have to buy the product in its raw material, in its raw stage, which we call raw materials, and then convert or assemble them into a finished product. So, a lot is required when it comes to running QuickBooks for retail and manufacturing. So one of the things we're going to be looking at first is setup. Setup is very important. Now, before you start posting transactions for retail and manufacturing company, it's important that you do the basic setup that is required. The basic setup helps you to get your account in order because you can't start posting transactions when you don't have your customers, you don't have your vendor, you don't have your bank account, you don't have your inventories already set up. And these inventories are not just limited to raw materials. You have to impute all the inventories, then configure the bill of materials required to produce a final product, and then you can then manufacture. So once you manufacture, you then look at sales. So you see how setup is very important before you move into posting. And once you're done posting your transactions, you can then move to reports. So these are the things we're going to be touching in this tutorial or in this video guide. So the first thing is setup. How does setup work? Setup helps you configure the software in such a way that you can start posting transactions. So the first thing we need to look at on setup stage is our customer center. So when you go to customer center, you will see that we don't have anything right here, meaning that it's a fresh company setup. So how do you add your customer? You go to new and then you select new customer. So this new customer section is where you're going to be adding your customer. So for instance, let's say you sell to Mike Retail Store. You enter Mike Retail Stores and supplies as your customer, and then you click on OK. So if you have multiple customers that you sell to, that is where you're going to be inputting all the customer information. So here, if you have John Water Supplies, you're going to click OK. Now, for the purpose of this training, we have to create a company called Clean Table Water Retail and Manufacturing. So we assume that this company is engaged in the sale and distribution of table water. They also manufacture table water, so which means we'll be requiring a lot when it comes to production. So when we get to inventory, I will discuss that. So here we have the list of customers and also details of that customer. Now, assuming that is an existing business that you've been running and maybe you want to import previous data from either Excel or other accounting softwares to import into QuickBooks. Now, when you are setting up your customer details, it's not limited to the name of the customer. You have to impute the opening balance of that customer. So that's very important. So let's say you have all water company as one of your customer. Now, as at when I am recording this video, it's already 31st of December 2022. So we're going to assume that this customer, as at the end of this day, is owing us 240,000. So that's exactly what you're going to impute. So what does that tell you? It means that as at the period you're setting up your account in QuickBooks, this customer owes you this particular amount. So that's what you're going to impute here as the receivable balance. And then you have the customer information like the company name, the contact information, and then the phone number and whatever information you want to impute right here. And then if there are other important details you want to input about the customers, you have them under the payment details, you have your sales tax, you have additional information, you have your job info. So, but the most important thing you need to input when you are setting up your customer detail is the name of the customer, the ending balance of that customer as at when you're setting up your account in QuickBooks. So let's explain this. Now, assuming that your year end or your financial year runs from January to December and you want to set up your account in March. Now, what you're going to do is that you have two options. It's either you go with the beginning of the year. Beginning of the year means that you're going to be entering the 1st December, whatever year that you are, as the opening balance, and then you're going to be you're going to start your posting from 1st of January up to March, where you implemented QuickBooks. Then the second option is to start with March. So most of the times, most clients prefer to start their book as at the beginning of the year. So we have all water company. You click on OK. So when you click on OK, you will see that the system is already displaying the balances that the customer owes you as at the end of that period. So you can use this to track all your receivable balances. So if I have another client called Nesto Limited, so under the opening balance, you're going to impute 450. So, and then you leave your opening balance as this. So, what does this tell you? It means that as at the end of this period, this is what the customer owes your business. Then you click OK. I discussed other details you can add if you think they are very important. So, this is how you update your customer information to the system. Now, assuming that you have multiple customers, maybe spanning into 100, 200, 300, you may not have the time to start posting them one after the other. There is room for you to import your customer information from Excel into QuickBooks. So you have the right here. So you can as well go to customize the column. So this is where you're going to select the important column that is required to set up your customers in QuickBooks if you want to import them in bulk. Like here we have choosing column, and then you can come back here, the balance of that customer, the date, and then the first name, last name, whatever information you want to impute. So when you click OK, you will notice that the number of column on this section would reduce based on the customized column or based on what you selected. And then on your Excel, you have to be sure that the number of column on Excel also correspond, which mean with what you have in QuickBooks, meaning that if this QuickBooks import will only require you to enter the name, the customer balance, and then the opening balance date, then your Excel should also have the name, the customer balance, and then the opening balance date. So this is how you import your details from Excel into QuickBooks. Now, there are some instances where you're setting up your customers and your customers have credit with you. Maybe they've made advance payment to your account as the seller, and then you're here to supply. That it's not going to be seen as a receivable. You're going to take that as a credit in the name of that customer. So CCL Limited. What are you going to do? If you have a credit of minus 900,000 naira, so you're going to impute minus 900,000 naira. So this is different from imputing 900,000 naira. When you impute 900, it assumes that the customer is owing you. But when you make it minus, you assume that you are owing the customer, meaning that before the end of this day, you were yet to supply, or as at the end of this period, you were yet to supply the customers for the payment that you have made. So that should be treated as a credit in their name. And then you click on OK. So you have these two. So these are just the few information you might probably want to impute as regards your customer details. So like I said, if your customers are more than this, you can always run a bulk import on the system. So this is how to impute your customer details. So the same way you set up your customers, that is how you set up your vendors in QuickBooks. How do you set up your vendors in QuickBooks? You go to vendors, and then you can see that the vendor center and customer centers are the same, they are not different. So you come here, who are your vendors? Your vendors are people or businesses that you buy your raw materials from, or businesses that provide services to you. So they're more or less like your service providers and your product suppliers. You go to new vendor right here, and then who are your vendor? You enter the names of all your relevant vendor. So you can say raw supplies limited. Now, the same way you have your opening balance here stating what your customers owe you or what you owe them whenever they pay in advance as at the period you're setting up. The opening balance right here also indicates what you owe your vendor. So if you owe this vendor 567,000, you come here, you input 567,000 as at the end of this period, and then you click on OK. You can as well input the contact person in that vendor's company. So you click on OK, You can see right here you have your vendors listed here. So if you have multiple vendors that you buy from, you input here. Now your vendor information are not limited to your product providers. You can also input your service providers. So they are also your vendor. So you come here, you input your vendor information. So if you owe this guy 70,000 naira for audit services rendered, you can as well come here and input that, and you have your. So all the balances of each of your vendors makes up your payable balances, and then the balances on your customer center makes up your receivable balances. The reason this is very important is because as a business, the essence of deploying an accounting software basically is to track money flows, to check what is coming into your business and how money is leaving your company. So that's the reason why you're doing this particular exercise. So right here, we've set up our customers, we set up our vendor. Now, the another important information we want to do is inventory. Note, as a retail and manufacturing company, one important area of our business is inventory. Being able to check for inventories that are coming in, inventories that are going out, and how these inventories are being converted to a final product and making them available for sale. So on the system, you have list and then item list. Item list section is where you manage all your vendor information. Sorry, all your inventory information. So you have item list. Under item list, you come to item and then new. So this is where you add your inventory information. So like you can see right here, we have services, we have inventory part, inventory assembly, non-inventory part, other charge, subgroups, discount, payment, sales tax item, sales tax group. Now, if you're going to be adding your inventory, the first thing you want to check for is the type of inventory, the nature of inventory you're adding. If you're adding a raw materials, you're going to select inventory parts. So inventory parts is used for goods you purchase, track as inventory and resell. So let's assume that you're a retail company, you only buy and resell. If you want to input your inventory, you select inventory parts. But if you run retail and manufacturing, you're going to use inventory parts for raw materials and then use inventory assembly for final product. So you're going to use inventory part for raw materials and inventory assemblies for final product. So here you come here, inventory assemblies. Now, inventory parts. So what are you going to do? You're going to input necessary raw materials that are needed to produce that product. So what do we need? First is water because we sell table water. So we need water. What is the unit of measure for our water? We need liters. We need it in liters. So here you come here, you input liters and then LTR. You click on finish. So once you're done, what next again? What is the cost per liter? So let's say your cost per liter is 100, depending on how much you buy and what your price is in your in your country. Then what is the sales price? Now, we're not going to be selling this water, so we're not interested in the selling price of the water because the water is going to be used to get us our clean table water, which is our bottled water. So we don't need that. Now, how many liters of this water do we have in store? We have 23,000 liters of this water in store. So you're going to input that right here. So here you're going to select your sales. Even though we're not going to sell this water, you're still going to select your sales right here. This is just important, but we're not going to be selling. So that's why we're not inputting the price of this water. Then the next thing we're going to do right here is to click on OK. So we've entered that of bottled water. So the next one is we're going to input another raw materials that we need. Which raw material do we need? We need the plastic bottle itself. Plastic bottle itself. How do we measure a plastic bottle? You measure them in pieces. So here you come here, you put in pieces, and then you click on finish. So what's the cost of a plastic? So let's use 50 for instance, and then we're not going to be selling plastic, so that's why we don't want to impute the selling price. And then what's the quantity of plastic we have in stock? We have 4,000 pieces. Remember, our unit of measure is in pieces, and then you click on OK. Now, if you have more inventories to impute, rather than clicking OK and then go back to your item to start all over again, you click on Next. So it will save that inventory and give you another window to impute the next inventory. So the next inventory we have is our label around the bottle itself. So how is our label measured in pieces? So if there's an existing unit of measure that can also be used for the inventory, you just select it. You don't have to create a new unit of measure for that inventory. And then what's the cost per label? 5. And then you have every information. How many labels do we have? 8,700. Now remember, when you are setting up your inventories, one of the requirements that we always ask is for you to give us all this information. So we have a standard Excel sheet that we're going to send to you. That Excel sheet contains the name of the customer, the vendor information, the inventory information, the banking information, the tax, the fixed assets, and every relevant details. Now, for manufacturing, we also have a space for the bill of materials for each of your final products, or some companies will call it formula, where you're going to impute all your final products and then the raw materials that you need to produce them, as well as the material requirements or the measurements or formula to get those products to produce your final product. So that's very important. So we have added our water, we've added our label, we've added our bottle itself, and then let's assume that we're going to use these three to produce the bottled water that we need. So we have the label, we have the plastic bottle, and then we have the water itself. So all this that we have done so far, if we go to report on the system, they're going to form part of our inventory reports. So you can see from your inventory report, you have the label, you have the plastic, and then you have the water itself. So those are the inventories of raw materials. Remember, you need to add your raw materials first before your finished product. And then based on what you've entered, the quantity on hand multiplied by the cost of that inventory will give you the value of the inventories you have install, just like you've seen right here. So I hope this is clear. I hope this is understood. And then the next part of inventory is the finished product itself. How do you impute your finished product? You come back to item, you go to new. Now, another option, another way to get here is to right click on your inventory window and click on new, or you can as well come back to home and then you see item and services. So whichever way you think you want to check your inventory is up to you, but they are all going to lead you to the same inventory center, just like we've discussed before. Okay, so let's go back to item, new, and then you have the option of selecting these inventory types. Remember, we're going to select inventory assembly for final product, and then you use inventory parts for raw material. So when you select inventory assembly, you can see the descriptions here is used for inventory items that you assemble from other inventory items and then sell. So if it's an inventory that you assemble from other inventory, it has to be assembly. It has to be assembly. It's very important. So it's not just limited to this bottled water. If you assemble laptop, PCs, you assemble mobile phones, as long as your inventories require you to assemble other items, then it's going to be tagged inventory assembly. So that's very important. So here we're going to call this our bottled water. Now, what do you need to produce your bottled water? We're going to set that later. Now, look at this option here. We have an option of stating that we purchase this assembly from a vendor. So, for instance, there are companies that may not be able to produce enough of that inventory and then will require additional order from other vendors. So, if you do that, you have to click on I purchase this assembly from a vendor. But if you don't, you leave it like that. Now, what is the unit of measure for your bottled water? It's going to be in pieces. So that's one plastic, one piece of your bottle. So that's what we have as unit of measure. Now, you also have the option of imputing cost. Now, you can't impute cost right away. The reason is because this is not an inventory you buy to resell. This is an inventory you have to manufacture from other inventory. So for you to ascertain your cost, you need to look at the cost of each of the raw materials that are required or that goes into the manufacturing processes. So when you impute your name, which is the name of the inventory, and then the unit of measure, Go straight to bill of materials. So this is where you select each of the materials that are required to produce this bottled water or the item you produce. So it's not limited to bottled water. Whatever you produce, if you run a baking company, you probably you bake bread, you bake meat pie, you bake cake, all the necessary items that are required to produce that cake, like your sugar, like your flour, whatever you need, you might have added them first as inventories of raw materials. And then under the item name, you're going to select bread, you're going to select meat pie, whatever you do, and then come here to impute all the materials needed to produce. So this system works for every manufacturing company. As long as you have a list of your raw materials and finished product, then you shouldn't have issues with your manufacturing processes. So here we're going to select the items required to produce the bottled water or assemble the bottled water. The first one is we need the water. The second one is we need the plastic bottle itself. And then the third one, we need the label. Now, this is just for purpose of demonstration. In your company, in the real life scenarios or real transaction case scenarios, a lot is required. You might probably need to have more than these three when you're producing your bottled water. So this is just for demonstration. So you will understand the processes. So if there are other items required, you're going to be selecting the other item in each of this row that we have right here. Now, as you select them, system displays the cost of that inventory and the quantity. What is the quantity? The quantity is how many of this water, how many of the unit of measure do you need to produce one bottled water? So let's assume for the water, we need 3 liters of water to have one bottle, for instance. And then for the plastic, how many plastic do you need to produce one bottle? You need one already here. How many labels do you need? So let's say you need one. So if you have two label, maybe one in each of the sides, you can come here and say, I need two label to produce this. Now, based on the quantity that are required to produce this bottled water and the cost, we are now able to ascertain the total cost of producing this bottled water, which is 360. How did we reach that? 300 multiplied by 3 right here. So 300 here is a result of 3 times 100 and then 1 times 50 and then 2 times 50. So that's how we arrive. So you can then come back to cost here to say our cost of producing a unit of water is 360. Now remember, when you were inputting each of these raw materials, I asked you to leave the sales price as zero because you are not going to be selling the raw materials. What you're going to sell is the bottled water itself. So this way you are not going to impute your selling price. If our cost price is 360, we can as well come here and say our selling price is 600 per bottle. And when we sell this, it goes to a sales account. So now, as at when we are doing this setup, do we have existing bottled water in store? That's another thing you're going to check. Do you have existing bottled water in store? If you have existing bottled water in store, you're going to input the quantity on hand right here as, let's say you have 15,000 bottles in store. But if you don't have any, you're going to leave this as zero. So this is very important because majority of the times when we do set up for manufacturing, we notice that they have existing inventories in store and that has to be accounted for in your setup. So that's why we quickly imputed 15,000. So let's make it a realistic figure. We have 15,670 units or pieces of already manufactured bottle in store as at the time we're for configuring. Now, this is configuration, this is setup. We're not posting transaction. So when I click save and close, it's not going to hit any of our ledger because we've only configured this system in such a way that whenever we produce one bottle water, this is the quantity of raw materials that is going to be needed. So if I require 10 bottle water, automatically 10 times 3, it means I need 30 liters of water based on the unit of measure, and then I need 10 plastic and I need 20 label. So that's why I said this is a configuration and not a transaction. We are still running the setup part of the system. So if you go back to your reports, inventory, and then inventory valuation summary, you can as well see how the system is going to segment the inventories. We have the inventory parts, and then you have the inventory assembly. The inventory assembly is the bottle water itself. The inventory part is the label, plastic bottle, and then the water itself. So it's going to tell you the quantity of each of the raw materials you have in store. So that is how to set up your inventory. So for manufacturing, inventory is not more than this. So this is just a demonstration of how QuickBooks works for a bottled water manufacturing company, but the process still works for other manufacturing company. All you need to do is to state the raw materials you need and then the bill of materials or the material requirement for your final product. It's as simple as that. Whether you produce bottled water, you produce plastic, you produce furniture, you produce cakes, whatever you produce at all, it just requires you to have your raw material set up and then your final product in such a way that you are able to track how these raw materials are being used to produce your final product. So that's what we have here. So still on our setup part, another important part of this setup is your chart of account. This is the backbone of every or standard accounting software. This is the backbone of a standard accounting software. Why did I say that? This is a software. The software doesn't understand, doesn't speak to you. The software only works based on your instruction. That's why they say a software is a sort of programs that tells you what to do or that works according to your instructions. Now, this system has been set up in such a way that whatever you post on this system, that is what it's going to process. So before you start using an accounting software, you need to first ensure that your chart of account is properly set up. What is chart of account? Is an account that categorizes your transactions to income, expenses, asset, or liability. That is exactly what chart of account does for us. It means everything you're going to post on this system will either be an income transaction, expense transaction, asset, or liability. And that can only be defined on that chart of accounts. Let me give you an instance. Assuming I want to add a bank to the system, if I go to accounts and I select new, and I select my bank account. Now, if I want to add a bank account to the system will not select or assume that the name of the account or the type of account is bank because of the name. What the system will use to treat that account type, account is a type that we select. So when you're adding an account, make sure you select the right account type. Like here, I'm coming to add a bank account and then click on continue. Now, this is what I'm saying. System will not treat this account. So let's just call this Citibank. System will not treat Citibank as a bank account because the name is Citibank. This is just a description of the account. What the system will use to check or know the type of account we are adding is the account type bank. So if I come here and I say change this name as income, system will treat this as an income transaction despite the fact that the account name is Citibank. So that's exactly what chart of account does. It helps to categorize all your account name so that as you're posting, it knows which of the account is an income and then post them to the relevant income report. It knows which one is expenses, which one is asset or liability. So whenever you're setting up chart of account, it's important you categorize each of these account names to their account types. So there's relevant account types for proper reporting. So here we're going to select bank. So this is what the system will use to treat this account as a bank and not the account name. So this is just a description to say, okay, this is exactly what this account is or to differentiate each of your banks. But the system already knows that anything you enter here is going to be treated as a banking transaction. And then we come to opening balances. This is where we enter the opening balance in that bank account as at the period we're setting up, which still remains at the 1st of December, and then we click on OK. So this is what setting up a bank account looks like in QuickBooks. One, you're going to enter the account type. We're going to select the account type, you enter the account name, and then the opening balance of that account, and then you click on save and close. So back to what I said earlier, system will not treat this as a bank because the name is Citibank. System will treat this as a bank because the account type is bank. So that's how the system differentiates different banks. So if we go back again and then I go back to banking and then select new, we're also going to be adding another type of bank entirely. So if I'm going to add a bank called, let's say, JP Morgan Chase, to bank. Like I said, system will only recognize this account name. It's just an account description, just like a name. This thing will only recognize as a bank because the account type is bank and not because the name is JP Morgan. This is a software. You can probably mention JP Morgan Chase to another client and then they would automatically recognize it as a bank. But when you mention it to a software, it's not going to recognize it as a bank because it's just a software. So what the system will use to recognize as a bank is the account type of that bank. So you come here, you select the opening balance of that bank, and then the statement ending date is 31st. You click on OK, and then you can see right here. So that's exactly how the system is going to treat each of these account name you're entering, which is classified as a bank. Likewise, other type of accounts like sales, you can see right here, system is not going to treat this as sales because the name is sales. It's going to treat it as income because the account type is income. So when we talk about chart of account, this is exactly what you should be focused on, the account type, because it is the type you select right here that determines how the transaction that passes through this account name will be processed. So let's go back to adding our name. So let's come to income. Now, if I'm going to add an income account and I mistakenly come here to add the name of a bank, for instance, so let's say I use First Bank. Now, how do you think the system will treat this transaction? It's not going to treat transaction as a bank. It's going to treat it as an income transaction because the account type is income. So this is more important than the account name because when you're generating your report, rather than see your banking transaction in the appropriate section, you're going to be seeing your banking transaction as an income in your profit or loss account, and that would be wrong if you understand accounting. So it's important you treat your chart of account very well. You configure your chart of account very, very well so that when you go to your report, you are going to be seeing the necessary account name in their various on their relevant report, and also ensure that your account is properly set up. So what am I supposed to do? Come to account type and then change this to bank. If there's no money in that account, I can leave it as zero and click save and close. So it's not just an account that has money in it, you also input all the account name with zero balances. Now, another thing again you can do is if your chart of account is in bulk, you can as well run an import from Excel. You can see right here, you can import chart of account from Excel. So if you have a standard chart of account that you're bringing from maybe Excel or other softwares, you really don't have to discard them. You can delete each of the chart of accounts you have here and import from Excel into QuickBooks. So that's to tell you how flexible QuickBook is. All you need to do is to define the name or the column that is the name, and then define the column that is the account type, and then define the column that has the balance, which is optional. But the most important thing is the name of the account and then the account type. So it's the account type that determines where the transaction will be posted and how it will be treated in your books of account. So that's exactly what chart of account will do for you in QuickBooks. So from all that we've posted so far, so I feel that I can move to the transaction part of the system just to demonstrate how the workflows of manufacturing works in QuickBooks. So we've been able to look at the customer center, we've discussed the vendor center where we added one or two vendors to the system. We've also looked at the inventory centers where I was able to add raw materials and finished product. So let's move to transaction properly. Now, first workflow, assuming you want to buy new products, you want to buy new raw materials from your vendor, maybe you feel that you don't have enough inventory in store. How are you going to post them to the system? The first thing you need to do is to go to your purchase order. You can see your workflow right here. So you go to your purchase order. Purchase order is like a request you send to your vendor asking them or stating that you want to buy XYZ product. So here you come to vendor and then you want to buy from Raw Supplies Limited. What are you buying from Raw Supplies Limited? You want to buy a plastic bottle from them. How many units of plastic bottle you want to buy? 3,400. You can see at a cost of 50, that will give you 170,000 um, depending on your currency again. And then as at when, you can also input the date, maybe like 1st of January 2023. That's what you want to make the order. And then you click on save and close. So you can as well fill in every other information that you need right here. You've done that. Now, what's the workflow? When you send a purchase order to a vendor, you are supposed to receive a request or a response from that vendor on whether the materials are available or not. So here we'll go to receive inventory with bill or without bill. How does with bill or without bill works? When you receive that inventory from the vendor, there are invoices that actually comes from the vendor stating the summary of what you're supposed to pay them or the value of the goods received. That's bill. So sometimes bill and invoice are the same. It all depends on the party or the person you're receiving that item from. If you're receiving it from a vendor, it's an invoice. If you're send it's a bill. Sorry, if you're sending it to a customer, it's an invoice. So you have receive inventory with bill and then receive inventory without bill. So let's use receive inventory with bill, stating that when we received that plastic bottle, it came with invoice. You can see for selecting the same vendor, system is going to tell you that an open purchase order exists for this vendor. Do you want to receive against one or more of this vendor? Yes. You come here, you select yes. This is the open purchase order we entered earlier. So what is the advantage of this? We don't really have to post anything again, except the supply is different from what we have ordered. System automatically import everything we've posted in that purchase order down to our bill, which is where we're receiving the inventory. So all you need to do is to check if the quantity supply is less than what you have here, like we've ordered or we requested 3,400 and they're able to supply 3,336. You have to quickly adjust it, because if you don't do that, system will bill you for 3,400, whereas the actual inventory received, and that will probably affect your account. So you're going to select this. Now, what is the supplier's terms of payment? You have amount due of 166,800, maybe like 30 days, 11. So we received the bill on the 1st of January. Our due date is going to be 1st of February 2022, which is like 30 days time. So you can come here and then put net 30 days. That tells you that the bill is due in 30 days. So you can input every other information you want to set up right here, description of the inventory. Now, if it's connected, if that inventory supply is connected to a particular customer, you come here, you select the name of the customer, which means that you're actually ordering or receiving this inventory uh, irrespective of the job that this customer, or maybe like a supply or an order from this customer. So once you're done, you click on save and close. What is the implication of this? It means that you have received the inventory from the supplier. It becomes a payable. It becomes a payable. A payable means you're owing that supplier. You're supposed to supply them, or you're supposed to pay them for the supplies that you have received. Now, how do you pay them? You go to pay bills. So you can see right here, in addition to the payables you have, you now have additional payable of 166,800. To go here and then you select the amount you want to pay. It's not compulsory that it has to be everything. 166,800, that's where you're paying them. And then the bank from which you're paying from, you click on pay selected bill. So that is cleared already. Again, the implication of receiving that inventory now is that the quantity on hand in store has increased. So inventory valuation summary is going to tell you that the quantity on hand has increased. You can see from plastic bottle, we now have 40,000 units of plastic bottle. When you double click on it, it shows you a summary of that plastic bottle. Now, we have only received into store, we are yet to manufacture. So, how do we manufacture our plastic bottle? To manufacture your plastic bottle, you go to items and services right here, and then you'll see activities. Then you see build assemblies. So build assembly is what you need to manufacture your inventories. Build assembly is what you need to manufacture your inventories. You go to build assemblies and then you select the assembly. So when you select the assembly, you will then see the list of the materials that are required to produce this assembly. You can see right here, these are the list of materials required to produce this assembly. We have the bottle water, we have the plastic bottle, we have the water, we have the label. Remember, this was what we entered during our configuration. Components needed to build bottle water. So how many bottle water are we looking at? If you want to produce 300, let's say 900 bottle water. Now, based on the configuration we've entered, by the time you click here, system will tell you the quantity needed to produce 900 plastic bottle water. Here we need 2,700 liters of water. Then here we need 900 plastic bottle. Here we need 1,800 label. So let's expand this to 1,500. You come here again, you click this, you can see based on the quantity of bottled water you want to produce, system automatically calculates the material requirement of each of the raw materials. So this is very important because without this, you won't be able to run manufacturing processes. Let's increase this to 5,000 bottle and see if we have enough in store. You can see right here, QuickBooks doesn't have enough component to produce. So if you don't have enough component to produce, system automatically let you know and you can proceed with it. So let's see if you can produce 2,000 bottle water. Yes, we can get 2,000, which give us 6,000 liters of water and 2,000 plastic bottle and 4,000 label. So let's run our building assemblies like this. When we build, what happens? The quantity of finished product we have in store will automatically increase by 2,000, and then each of the raw materials that you have will reduce by the quantity needed because assume that you've already used them to produce. So it's not going to be correct to still give you the same quantity in store after production. So you click on build and close. So let's go back to our report and then inventory reports. So you can see that our plastic bottle has increased to 15,670. Let's run this report as at 1st of January. Okay, so you can see right here, our plastic bottle is now 17,670. You can see our plastic based on new use. You can see initially this is what we had before, and then we have used 2,000 to manufacture 2,000 units of bottled water. So if you come to bottled water and click here, it will also show you what you have in store. You had 15,670 in store plus 2,000 units that was produced. That will give you the new quantity at 17,670. So you can see right here, that's how manufacturing work, meaning that all the materials you need have reduced while the assembly has increased. So that's what you need to know as regards configuring your inventories, assembly, and raw materials for manufacturing processes. So I think this is actually where you need to uh, get your retail and manufacturing setup right, which is raw materials, configurations, and also final products. And again, if you want to sell used bottled water, you can as well use this section. You have your estimates, you have your invoice, you have payments, and then so what does that tell you? If you're selling on credit to your customer, you go to invoice. So there's a clear difference between invoice and receipt when it comes to use of an accounting software. Your invoice is used for credit transaction and receipt is used for cash transaction. So here you come here, you select the customer that you're selling to, which is All Water Company. How many are we selling to them? First, we're selling plastic bottled water to them. You can see assembly. How many are we selling to them? We're selling 1,500 units of bottled water to them at 600 naira each. That will give us 900,000 based on your country. And then if you have a sales rep that sells for you, probably like a marketer, you can come here and input the name of the sales rep on the system. Now, the essence of the sales rep basically is to help you track the performance of each of your marketer. So you have this, and if you also have your own terms of payment, maybe they're expected to pay you in 15 days. You can impute 15 days right here. And then how do you want to deliver to them? You can impute the name of the customer and every other information you want to impute. Now, the total cost of this is 900,000 naira. So we're going to get to tax in other videos. I'm going to talk about tax in other videos, but just for me to focus on manufacturing processes itself. So here you have 900, and then you click on save and close. Then once you're done, you can move to receive payments where you receive the money for the sale that you have made, and then you see all water. You can see right here. This is initial balance they owe. This is what they are owing us right now, 900,000 dollars, naira, whatever currency, euro that you're using to track. Now, if you notice again, on receive payment, we do not like to receive payment and come to record deposit. It's a long process. So I'm going to combine record deposit and receive payment. Why I said that is because when you receive payment, system automatically takes the payment to a default account called undeposited fund. For me, undeposited fund is not realistic. It's either I receive the money into a cash account or receive the money into a bank account. So because of that, we will go to edit, preference, and then payment. What am I trying to do? I want to deactivate undeposited fund as a default account and then be able to add or select the bank account where the money was paid into or the cash account where the money was received into. So here I'm trying to restart the system so that when we receive payment again, it will take us to undeposited, it will not take us to undeposited funds. So you can see now that we have customer payments. What next do we have here? We now have the option of selecting the bank account where the money was paid into. So I'm going to come here, receive payment. So let's say we receive 900 initially. Out of the 900, yes, we receive 900. Sometimes customer can make part payment. So let me explain how it works. 450,000, then you have a balance of 450, which is 450 from this particular invoice. But addition of 450 to this will give us total balance. So there are times where when the customer pays you, you have the option of leaving it as underpayment or write off the extra amount. So if the customer is withholding tax from you, that's when you're going to write off the extra amount. Or if you're giving the customer a discount. So for now, let's assume there is an underpayment. And then we're receiving the money into our JP Morgan Chase account. You come here, you click save and close. So that's how you receive payment from a customer into your actual bank account. So I think the process of setting up QuickBooks for manufacturing, it's centered more around your inventory itself, which is setting up your raw materials and final products. You can always follow our guide on banking, payment, expenses, which I'm going to be sharing in this video. But I wanted to pay more attention to your inventory because it's very, very key. If you know what happens to your inventory, if you know the quantity of inventory you have at the beginning of the month or at the beginning of the year, and then you're also able to track the inventory you have at the end of the month or at the end of the year, you most likely tell what happens within the period. If the inventory has increased, there's an additional purchase. If the inventory has reduced, there's a sale. If there's a sale, where is the money coming from? If you have received part payment, then it helps you check for receivable. So you can see that knowing what your inventory is at the beginning of the period and at the end of the period tells a lot about your business. And if some inventories are missing, you can also post that on the system as inventory damage or stolen inventory, which is a cost to you. Sometimes it could be a direct cost if it's directly connected to your line of business. But if it's not, you can probably take it as a normal indirect cost. But at the end of the day, knowing what is happening to your inventory at the beginning, during, and end of the section will most likely help you keep track of your manufacturing processes. So that is very, very important. And then we have the banking information. The banking side is where you are able to manage your bank account. Like here, we have the use register, which helps you to check all the transactions in the bank. So if I select JP Morgan Chase right here, it will show you all the inflows into your bank account. You can see the initial balance we started with, the payment we received from this company or water company, and then you are able to see your new balance, which is 54.4 million. So that is what banking does for you. Number two, you are also able to do bank transfer from one bank to another. You can see right here, you can transfer money from Citibank to your first bank. How much are we transferring? I'm transferring 14. So here you can also click on save and close. If you go back to reports, sorry, banking, use register to check our first bank, you will see that the money you can see right here. And if you also go back to our Citibank, you also see that your bank balance has reduced by equivalent of that same 14. So that's how you manage your account in QuickBooks. Now, with all that we've posted so far, it also reflects in your financial report. You're able to check your profit or loss accounts, your customers and receivables, your sales, your purchase, your inventories, and every other thing that is required to know how your business is doing. Most importantly for a manufacturing company is your inventory. So we have the inventory valuation summary, we have the inventory valuation detail. The valuation detail will tell you everything about the inventory up to the date and what happened. Most especially, I call it a inventory movement report because it tells you how your inventory is moving from one form to another. So that is very important. And then for reconciliation purposes, we have the physical stock worksheet. which helps you check the inventories you have on hand against what you have on the system. For instance, when you do a physical count of your inventories, you have a room to enter what you have counted here and then you compare. So the reason why you have to do this is because when you compare the inventories you have in your physical store against what you have on the system, you are able to check whether the system is giving you an accurate report of your inventories. If the quantity you have on the system is different from what you have in store, most times you may not get the right report because something is happening somewhere. Maybe some inventories were sold and you didn't enter it. Some inventories were purchased, you didn't enter it, or stolen. So this is meant for reconciliation. Now, when you're reconciling, it's not advisable that you make your store manager or you give your store manager access to your inventory. Tell them to go do their own count independently and then give you that report. You can then compare what they have counted, because if you allow them see what you have on the system, it opens your room for manipulations or fraud. So it's not always advisable to let your inventory storekeeper know what you have in store. So these are just the summary of how QuickBooks works for retail and manufacturing company. So if this is the first time you're watching this video, kindly hit the subscription button and turn on the notification bell. And if there's any video you want me, if you have a question, there's a video you want me to do, you can quickly drop in the comment section. Maybe I might pick your question and turn into a video in our next guide. So I hope this video helps you understand how QuickBooks works for retail and manufacturing company. There are other part of manufacturing that we'll also be looking at from time to time, but I just needed you to understand how QuickBooks works for retail and manufacturing company in this video. So kindly hit the subscription button and turn on notification bell. When I post more updates, you're going to see that on the system. So we're going to be dealing with all the industries in this channel. This channel is focused more on how QuickBooks work for different industries. So this is just for retail. Watch out for our next video on other industries.